welcome to another episode of Always Up to Date. My name is Denise and this is Yahweh, and we are the co-owners of Always Bookkeeping, which is an Edmonton-based bookkeeping company. And today we are going to be talking about payroll tax risks. Sorry. Our quote today is from Zig Ziglar. When you stop planning and preparing, you stop winning. And our statistic is from the Fraser Institute. The average Canadian pays 43% of income in taxes, like the CPP, EI, GST, fuel tax, etc. And by comparison, on average, only 37% of the remaining income goes toward basic necessities like shelter and food and clothing. So, you know, we have business owners that come in and they're behind in remitting their payroll source deductions, or, you know, some of them don't realize that they have to submit it or when they have to submit it. And so then they're accruing penalties and interest from the CRA, and eventually they're going to trigger a payroll audit. And so if you've ever had a payroll audit, you really don't want to trigger a payroll audit. So we have a few questions that we're gonna just go over, just to kind of help you to know what some of the risks are about not paying your payroll taxes.
Absolutely. So first one is, what does the employer contribution of CPP and EI of 7.37% mean?
Yeah, so not only do you have to submit taxes for your employee, but you also have to submit taxes for the employer part. So, and it works out to approximately 7.4%, 7.37 as we said. And so you have the taxes. Well, the employer doesn't have to pay taxes, but they have to pay CPP and EI. And again, those two work out to about 7.4%.
Okay. Yeah, so besides employer CPP and EI, what are the three components of CRA remittances?
Yeah, so what needs to be remitted to the CRA is the employee taxes, the employee CPP, and then the employee EI. You also have to remit employer CPP, which is the same amount as the employee CPP, and you have to remit employer EI, which is 1.4% of what your employee pays. So you have employee taxes, employee CPP, employer CPP, employee EI, and employer EI. Those are the things that have to be remitted.
When are most payroll remittances due to be submitted to CRA?
Yeah, so for most small businesses, it's the 15th of the following month when you paid the employees. So again, if you pay, say in May, pay your employees in May, those source deductions are due by the 15th of June. Sometimes they have quarterly remittances and annual remittances. Those are more for people or companies that have huge payrolls. And again, I think we talked about this before in another video, that the CRA will send you a letter letting you know when you can file quarterly. Yeah. But again, most small businesses, it's the month after you pay. Yeah. And payroll is based on cash, so it's when you pay your employee, not the period that they worked for.
Yeah, absolutely. Would you recommend waiting until the deadline to submit payroll remittances? I like this.
Yeah, I wouldn't recommend it. I mean, you can if you want to, as long as it's by the 15th of the following month. But why would you take that chance? We recommend, and what we do at Always Bookkeeping is we will do it when we pay the employees. So if you pay your employees every 2 weeks, we pay the employees and we submit the source deductions for that period.
And it's very easy to kind of match them with what payroll they're related to, as opposed to lumping them all together and remitting it. Yeah. That way you find out where the discrepancy is coming from, or if there's any error made depending on when CRA decided to post it. as much as CRA really wants to be accurate with these remittances, sometimes they do slip up on which period it's supposed to be at. So you just want to be careful in recording those, and by bi-weekly submitting them with your payroll, you know exactly what the remittances are for and which payroll period are for. So
yeah. And you also, like, you kind of get into the habit of it, so you don't forget. It's easy to forget. You know, the 15th comes around and you know you don't have a payroll to do, so you don't really think about the payroll source deductions. But if you do it when you're doing payroll, you normally don't forget, you just do it.
Yeah. What is the potential penalty for being just 1 day late on submitting remittances?
Yeah, it can be 20% for 1 day. You know, we look at credit cards that are 19%, but that's over a whole year. This is for 1 day, it can be 20%. The CRA looks pretty, they're pretty tough about the not getting those payroll source deductions.
Yeah. Again, this is money that you would held from your employee's paycheck, so it's money that's not really yours, and so that's why they're very strict on remitting those, because they don't want you to use that for your own business cash flow. Again, this is coming from your employee's pocket. Only a portion of it is a burden for
That's right.
for hiring employees, but most of it is what you take out from the employee's pay. So that's why they are very strict about it. How does CRA find out that you're behind on your payroll tax when you file your T4s?
So the CRA finds out that you're behind once you file your T4. So T4s are due in February, either February 28th or 29th, depending if there's a leap year or not. But the majority of the time it's due on February 28th. When you file that, the CRA matches that, what you filed, to what you've actually paid. So then they can tell that if you've, if you're up to date on your source deductions and that you've done all your filing correctly, or if you're behind, or if you haven't paid for whatever reason. And the CRA will send you a letter asking for you to explain the discrepancy. If you can't explain it or whatever, then a payroll audit is triggered.
Yeah, and there is some items that you want to take a look at too, to make sure that your filing is correct, because most of the time when you file your T4s, or your accountant or your bookkeeper does the T4s, if it's accurately done, then you should have two kinds of slips. So there should be T4 summary, and then you should have the T4 slips, which is the ones that you give to your employee. The T4 summary slips summarize everything that you have, or that you would have for the CPP and EI portion. And at the bottom, you will see a little box called the difference. So that right there will tell you if there is a difference between how much you've remitted on your records compared to what you should have remitted from what you withheld from your employees' paychecks. So that's another thing to look at. If there is a difference there, you want to look at that before you can even file it to the CRA. Our directors how aggressive is CRA in collecting remittances compared to other balances?
Yeah, the CRA is pretty aggressive in collecting this. Again, payroll taxes, the source deductions that you have to submit to the CRA, they consider them trust funds, trust monies, and so they don't belong to you. They belong to the CRA on behalf of your employees. You're remitting them on behalf of your employees. So the CRA is pretty aggressive. If you don't pay your corporate taxes on time, or your GST, they're a little bit more lenient about those ones. But payroll tax, they really do keep an eye on that and make sure that you're doing what you're supposed to be doing with those.
Are directors personally liable for payroll tax?
Yeah, absolutely they are. If you're not paying those and you don't have the money in your corporation to pay your source deductions, CRA will consider the director liable for that.
Yeah, you're a personal guarantor for being a director. Why is it advisable to have only one spouse as a director in a risky business?
Yeah, so in a riskier business, it's advisable to only have one spouse because the CRA can only come after the director. So they can't come after the director's spouse to get those payroll taxes. So, if you and your spouse own a house and the spouse is a director of a business and the CRA comes after them for payroll deductions, they can only take half of that house. Like, they can't take the full amount that you have in that house. They can't, or your savings accounts, or like, they can't touch anything that is the spouse's, only the director.
Yeah, absolutely. And taxes aside, it's recommendable just to have only one director just for that portion of the liability.
Yeah.
And also that there should be one decision maker. It is very, very counterproductive when business owners are indecisive.
Yeah.
So having one director just kind of makes it sure that you have one decision maker, that if you both are not deciding on something, one of them can override. So
yeah, that's right.
Yeah, not good for personal relationships sometimes, but
right.
Hey, it's
Exactly.
better to have a bad decision than no decision at all.
That's right.
How can effective tax planning help eliminate arrears payroll tax?
Yeah, so just again, planning to make sure that you are paying your taxes on time, your payroll taxes, making sure you have that money in the bank. Often when we're working with clients, we try to make sure that they have a buffer of whatever their payroll is going to be. I mean, you want to be able to pay your employees so that you have people to work at your business so you continue making money, but you also want to plan to have that money that's there to cover your payroll taxes.
Yeah, absolutely. And this is especially important for small business owners that are the only employees are just them, the owners. If you're deciding to pay yourself through salary, you got to make sure that you have those remittances that you have to those payroll tax deductions that you have to remit at the end of the year, even if it's an annual basis, because you don't want to be stuck with that bill at the end of the year if you know that you're going to pay yourself salary. So it's a very good idea to have tax planning. And again, even if you're remitting it for yourself, it's not a bad thing that it's coming out of your cash flow, because at the end of the year, if you decided that you're only declaring yourself a little dividend, this is still payroll source deductions or income tax deducted that you can use on your personal taxes when you file your personal taxes in April or June 15th. Yeah. So I think that's all the questions we have for today. I hope you guys find it informative. If you have any ideas on what you guys want us to talk about regarding Edmonton bookkeeping, let us know in the comments down below. Please like and subscribe to our videos if you like them, and we'll see you guys next time on our next episode of Always Up to Date.